A recession. Are we in it? Are we going into it? It doesn't matter. What we need to do is plan. And as a small business owner, you need to ensure that not only do you survive, but you thrive in a recession. What am I doing in the recession, and how am I surviving and thriving? What things can you learn from this video? Go check it out. Hi everyone, my name is Simon Misiewicz from Optimize Accountants. In this video, I'm going to be talking about small business owners and recession proofing, more to the point. And if you're wondering, are we actually in a recession? Then do check out this page from Wikipedia that talks about recession and how we know we are in a recession. Interesting enough, if you're a small business owner in the United States, it talks about, in the United States, it's defined as significant decline in economic activity spread across the market, lasting more than a few months, normally visible in real GDP, gross domestic product, real income, employment, industrial production, and wholesale retail sales. A bit of a mouthful, I have to say, for the US. But in the United Kingdom, a bit easier to understand if we're in a recession. It is defined as a negative economic growth for 2 consecutive quarters, 6 months in a sense, or half a year, depending on which way you look at it. And now we want to talk about, and go and check out that Wikipedia page, by the way, for more information about recession. But here we're talking about recession-proof and business owners in particular. And what I've done is, this is a great article from Forbes. I scanned the Google website for the top 20, 30 articles in Google right now. And I want to just bring to you your attention to this particular article. Go have a read yourself. So maybe pause the video, get the URL so that you can go look for it yourself. Okay, so let's have a look at this particular article. What does it say? It says here, a surprisingly large number of business owners do not have a handle on their cash flow or even know their numbers. It is no wonder that 82% of businesses fail because of cash flow issues. And what I would say to most people out there is this. If you are a business owner, you need to be on top of your numbers, whether that's sales numbers, whether that's your costs, that's your profits on a month-by-month basis, and then looking at your cash flow position from your customers as well. So making sure that you get money in, because at the end of the day, just because you have a sale and you've not got the money in yet, you may not have that sale at all, unless you know that money is coming in. So the big thing I always say to business owners, 82% is pretty much right, that whether you're in the US or in the UK, about that percentage of business owners fail. Why is that? Is it because they're just no good at their business, or they have no good ideas? Not always the case. Normally, it's because of financial problems they get themselves into. A lack of control, in effect. It's a bit like eating, isn't it? You know, if you want to lose weight, what do? You have to count your calories. You have to count the calories you burnt in a gym or running, whatever. And then you have this calorie deficit if you want to lose weight. And you have to monitor that, don't you? How you monitor it? Well, you count calories on the food you eat, you go to the gym, and then the result is you go on the scales and you see that weight going up. You want it to go down, don't you? So how do you do that in your business? Well, you use applications such as Xero or QuickBooks that allow you to pull together some profit and loss accounts, some balance sheet reports, and some forecasting as well. Really important for you to do that as a business owner. I know numbers is not the most natural thing to think about, but if you're a business owner, please, you owe it to yourself to be educated in numbers. And if you're not, work with someone who does. There's a lot of people in business, I think, are excitable about their potential growth of earning $1 million, etc., when actually they need to focus on their cash flow right now. So cash is king. A little bit sexist there. Maybe cash could be queen. But anyway, do your forecast on a weekly basis. Really important for you to do that. Now, one thing this article also talks about is one key way to recession-proof your business is to have multiple revenue streams. Having a variety of ways you are bringing in revenue at a wide range of price points is necessary to maintain your income regardless of the economy. Now, I'm not sure I agree with every aspect of that. I think you have to be careful that I see a lot of people that have got this shiny penny syndrome, and they go for Amazon, setting up an Amazon business, then they look at cryptocurrency, then they look at property, then look at self-employment income. And before you know it, they haven't really focused on any of them. They haven't delivered on any of them. And it all becomes a demoralizing experience where they have no income. And now they've spent all this time and effort and potential money on training courses, not done anything with it. How many people do you know that have done that? So one thing I would say is, yes, look at multiple streams of income, see which way your business can actually create more multiple streams of income. And I'm going to give you some ideas of what I'm doing as a business owner. So one of the big things I'm looking at is, well, our price point's quite high because we believe in quality of service. But what we are going to be doing is earning money from YouTube ads. So I'm giving you great content, but it'll be useful for me to earn from that. So YouTube advertising is going to be key for us. We're also adapting our website to do advertisements on there as well. And we're using strategic partners to refer business onto them. And we build up relationships between our clients and them. And then in between that, we try and get some money from our referred partners as well. Which ways can your business find new ways of extrapolating money? It's a challenge, but it's a challenge that you need to meet to not only get through this recession, but come out the other end more profitable than you went into recession. So here we have finally, here's my own tip. Don't wait until you're so by the way, this is not my own tip, this is theirs. But it says here, finally, here's my own tip. Don't wait until you're in a cash crunch to look at financing. Lenders are already talking about preparing for the next recession. And can you bet that there's one first things that they will do when it begins to start to tighten lending standards? What that basically means is that you will be looking at your finances. Banks might be giving loans at low interest rates right now, but actually those interest rates may go up, and we're already seeing inflationary decline because of interest rates going up. Now, interest rates going up means that's bad news for you if you're trying to get loans. So maybe now is a good time to get a loan rather than wait until later on. And looking at your finances, again, such a key thing anyway. Look at forecasting your finances for the next 6 to 12 months. And imagine that you only get maybe 70, 80, 90%. Stress test your business. So 70, 80%, 90% of your sales actually converts into money into your business. And stress test your liquidity to see how much financing that you need right now to get through this recession moment. Really key to work with your accountant potentially or your business advisors to help you with that forecast. Such a key thing to do. Here's another article I thought was really interesting from LivePlan. How to recession-proof your small business. Nicely titled. URL again is visible for you to have a look yourself. So pause the video, get the URL and read that article. Very, very good. In that article, they said, the foundation of any contingency planning is to start with your good baseline plan that forecasts your best guess for how things will go in the future. Now, you may be entering a recession. Before you enter a recession, you may have a forecast. What does that forecast now look like when you are entering a recession or are in recession already? Do your sales numbers look like they're declining, stable, or even increasing because you've got a product that works well for recession times? Do your forecast, maybe do 2 or 3 versions of your forecast to see where your finances will be in the next 6 to 12 months. Again, really important for you to do that. How many business owners do forecasts? Less than 10%. How many businesses fall out of business? 85. So just look at the numbers. If you're not doing it, you've got more of a chance of failing in your business than if you do a forecast and start to look at your income streams, your costs, and your profits. The big thing about that is looking at cost control as well. So make sure you look at your costs, see where you can cut back, not necessarily in terms of harming your business, but are there some costs in there that you think, well, actually, I don't need that. It's not necessary at this point in time. Maybe you can kill that cost off. I have put in there PDR, PDCA. This is something I use personally in my own business. And again, when I do my forecast, I'm stripping back costs that I think actually that cost would be great in growth time. So my marketing spend may go down if I feel that that particular product or service that I'm marketing isn't going to be helpful for me in the next 6 to 12 months. I might cut that back. If I have a product or service that I think actually this is really going to be so important for recessions and I can help a lot of people and earn money at the same time, then I might put more money into marketing. So this is not necessarily about cutting back, but it is a review of every cost that you have in your business and review. Do I cut back? Do I keep it the same? Or do I put more money into this cost line to help my business grow or at least survive during a recession? The PDR, PDCA is something I always do on a weekly basis. And when you're in recession, should it be weekly, monthly? I think it should be weekly, okay? Because the recession will bite hard and quick, and you need to react and adapt to survive. Now, PDR just does plan, do, review, or you got PDCA, which is plan, do, check, act. I'm just going to go with a PDR for now, but plan means that I do a forecast. So I know where my business is going. I do a forecast financially, income, and my costs. I look at the sales opportunities. I look at new clients, but I also look at my existing clients and say, well, in recession, I might lose 20% of my business. Now, 20% seems a lot, but that is always a prudent thing to look at. Your percentage might be different. It might be 50%. It may be just 5%. Carrying out my plan. So I've got a business plan. I'm acting on it. And then finally, review. I always go back to my, look at my action list, understand what has worked for me and my business financials. And I review those plans and make sure I put a new plan into plan. If I said that too many times, into action. So I'm always looking at my income financials, my costs financials on a weekly basis because I want to know where I'm headed. One plan might have worked the previous week. It may not work the next week, and I have to change my plan accordingly to make sure that I'm growing or at least I'm surviving in recession. The same article talks about diversification is a great strategy for handling downturns in your business. For example, during the coronavirus, many high-end restaurants expanded into the takeout market as well as shifted towards lower cost offerings, targeting a different customer base than they would have traditionally targeted. And that's very true, actually. So one of the things that we're saying is, well, let's focus on tax calls and not just tax returns. Now, typically when people have got good growth in their business, they might need a tax return doing. But if they're trying to cut back, they might say, well, I need to just pay for some advice, but I'll do my own tax return. I don't want to do it. It's not something I'm good at, but I need to save some money. So rather than do that, can you charge me for a tax call instead? And we can give advice on that person's tax return and tax strategy going forwards, but not necessarily charge them the same price for doing a tax return retained service. So that's how we're doing it. How could you start to think about your business and where you diversify? What are the needs of your customers now out of recession? And what are your needs of the customers when they are in recession? And how could you adapt your products and services to meet those new needs and, in effect, make more money from recession, never mind just to survive? Hopefully that video was useful for you, but please do not stop there. There are plenty of videos that I know that will help you build your wealth whilst reducing your tax liability. And in this video, well, this is the one I think you should be watching right now.